So as a home buyer, if you're looking for more leverage without waiting for the market to crash, that's exactly what's happening right now. So mortgage rates are dropping, sellers are getting more jittery, and they're likely to make a better deal with you if you just make an offer. So I know that we've been hearing the term more opportunity is coming for the last couple of years now, but things are actually happening right now that are different than they have been in a while. So home sales are actually climbing, rates are back near 6%, and nearly 15% of all contracts are falling through, which means sellers are more motivated to work with you as a buyer. And this isn't just theory. I'm tracking this stuff in real time, helping buyers navigate this before the headlines in the news actually catch up. So if you're thinking about buying, this week actually might be your right window. What's up, everyone? It's Ryan Miracle with Roff Mortgage. Hope you guys are doing well and enjoying your week. So what I wanted to do is give you kind of an update of where things kind of are in the market, the economy, so that way you guys can be better informed and make better decisions. So in essence, what we're seeing is I'm actually shooting this as the the Fed rate announcement is getting ready to come out. And long story short, I expect there to be really no market change with mortgage rates after the Fed makes a decision one way or another. So what we've seen over the last couple of years is what's really driving the mortgage rates is the job numbers. So in the last administration, we had a lot of false reports and false reporting, and things would get redacted when the real job numbers came out a couple months later, and then the market would adjust accordingly. So I don't necessarily think that this administration is trying to do that, but I do feel that the economy is not necessarily doing as well as what everyone's saying it's doing. So what you want to track as far as what direction mortgage rates are going to go is going to be largely tied to the greater economy, more specifically the jobs numbers. So at the same time, the inflation numbers came out, and what I wanted to let you guys know is like the inflation numbers that they are using and they're guiding all of their decisions by are not the inflation numbers that we feel on a daily basis. So like grocery stores, cost of living, housing, insurance, medical, childcare, like all that stuff is not necessarily allocated in the or the inflation numbers that the feds are making their decisions off of. So what this means for you is a couple things. So as a home buyer, that means that rates are going to continue to drop slowly. And by Zillow, by Fannie Mae, Freddie Mac, we're saying that mortgage rates are probably going to hover just at or below 6% all the way through 2026. So we're going to have some time with rates as they are right now. So if you're waiting for 3% to come back, it's not going to happen. So as a home buyer, you're going to have rates that are going to kind of flatline. But the cool thing is for you is we've been waiting for one of two things: more homes to be built or more homes to come on the market. And kind of a last one, ancillary, is less buyers in the market. And right now, that's really what's happening. So all of the buyers that were in earlier, the last couple of years, they've kind of disappeared because homes are kind of hard to afford, not to mention everything else. So what's happening is the people that are in the market right now to buy a house, they're finding those wins, and sellers are willing to negotiate because there's less buyers, houses are sitting longer. And since houses are sitting longer, home prices are starting to come down as homes are sitting on the market longer. So if you're a home buyer, you're actually going to find more opportunity going forward. If you're a home seller, you kind of missed the top of the market. I'm sorry. So if you need to sell, probably now is a better time than 6 months from now. But if you don't need to sell, I would probably hang on for just a little bit longer. So as we are starting to see more of a balanced market, more of a seasonal market, we're going to start seeing balance come back. And we're not going to be in like a dog-eat-dog, all sellers market all the time. So we're going to start seeing some more balance come back in. Now, if you are a home owner, you're seeing your credit card bills go up. You're getting ready for Christmas, kind of wondering how I'm going to make it happen this year. Grocery bills, all this kind of stuff coming in. Well, the cool thing is you can still capitalize on a lot of the equity that you've gained in your home over the last couple of years. So in this article, I've kind of laid out a couple of the details of what you can and can't expect with interest rates. So check it out. It's in the description. But point being is, like, if you are a home owner and you're finding yourself more squeezed because of things getting more expensive, unexpected expenses, the equity in your home could actually take advantage of that. So we've seen an uptick in refinances, specifically cash out refinances, in the last couple of days, more so than like we've seen in like the last couple of years. So rates are coming down. They're not going to go back to 3% like I said before, but I'll give you an example. I am refinancing someone right now that is working on paying off about $20,000 worth of credit cards. They're going from a 4% rate to a 7 point something percent interest rate because They just need to get rid of some debts, clean some stuff up, and be able to afford life again. So if that's you, if you're looking to try to either buy a house right now, now's your time. Start getting really serious, because sellers are getting not desperate, but they're getting more flexible in their terms. So now you have a good shot at buying a house. And then secondly, if you are a homeowner and you need to get some stuff cleaned up in your finances, your house might be a good way to do that and pay for some other things, credit cards, student loans, fund a HELOC, get rid of a HELOC. So right now, we're probably in the best shape real estate wise than we've been in quite a while. So I am hopeful that things will continue to progress in a positive, slow manner, because if rates dropped precipitously very quickly, housing prices just shoot right back up, and that doesn't help anybody. So that being said, if you're a home owner and you need help cleaning up your finances, hit me below, read the article, reply to this email, whatever works for you. If you are looking to buy a house right now, once again, now is a good time. We can get you in and out in 2 weeks. I'd love to help you guys. And if nothing else, have a great Wednesday, and I look forward to seeing you soon.